I'm Keith McCullough, and welcome back. This is the 9th out of 9, so 9 in a row. For those of you that have done 9 in a row and done them live, thank you for putting up with me. Thank you for that, because that takes a lot. I understand that, but I brought in the closer. You know?
Yeah, that's me.
That's you.
Let's close it. Let's do this.
I couldn't believe the schedule when I was like, no. It's CPI day that DDB is going to be the closer?
Yep.
Like, we didn't plan it that way.
Sure. I'm sorry, but there's something called an economic calendar that comes out in November the prior year, and it tells you when all the data is coming out.
There's no one better to have one as the closer on what I think is the biggest macro tourist day of the year, which we can talk about.
Yeah.
And I want to give you the biggest shout out that I can for those of you that were not at Hedgeye Live, because I don't think we broadcasted it live, but if you were at Hedgeye Live, you were there live, where Danielle basically shocked me and many of you when she said, I think it was in May, wasn't it?
Yes, and by the way, full disclosure, it's hard to shock you, but okay.
Well, you're like, okay, so she says, so Jay grew a pair, and then she went off and she just said, look, I think he's going to be way more hawkish than you or anyone who wants to talk about this thinks, and it's going to go on and on and on. So I got to say, I mean, you're the first one to say it. Many institutional investors that I know say, hey, who's that girl again who said that? And now they know who you are, obviously, but that was very early, and you deserve obviously all the credit in the world for that. That's what makes you the closer. And now everybody wants to know if it's going to be like from here. Everyone needs to know about the pivot. They don't want to know about that.
Everyone wants to know about the pivot. I mean, I flew in last night from Geneva, so I'm in a room with all these big family offices, chief investment officers, Singapore, all over Asia, Korea, all over Europe, and the one question was, when's the Powell pivot coming? And I'm like, you're running billions of dollars, people. Is this really how you're predicating your investment thesis? Is this how you're positioned? Everybody's like, I'm like, well, don't look. I had to sit and explain to them that shelter inflation moves through the CPI slowly. So even though house prices are coming down in the United States quickly now, he's got this stickiness problem that's going to haunt him.
Well, is it haunt him, or is it?
Or unless he wants it.
No, does he want it?
I think, and my premise back in May, and everything was predicated on Powell's being renominated but not confirmed. So they kept him hanging in the wind, swinging in the wind. Here comes the cartoonist. He's going to make a picture of Powell swinging in the wind. Everything was predicated on his not being confirmed by the Senate.
Right.
So he had no effective power. So you're inside the Eccles building. Your army occupies this building, but they don't know who the general is. They don't. Is it Lael Brainerd, who advocates for monetary policy addressing climate change and central bank digital currency so that you can basically do a leverage buyout of the Fed and make the Fed a permanent conduit of fiscal policy and make sure that the inflation that ignited never goes away? Woohoo, we can be a third world country. So is it going to be General Brainerd or is it going to be General Powell? Well, I mean, she had a lot more street cred with the academics because she is an academic. This guy's a lawyer. All he did was work out the whole Solomon Treasury scandal with Warren Buffett. What did he know? All he did was found the Industrials Group at a private equity firm. What the hell did he know? He didn't have a PhD in economics. So let's put him up on a stage in Jackson Hole and have him roll out this average inflation targeting bullshit and say that we're going to let inflation run really hot. And then why don't we remove the banks from the transmission mechanism of delivering monetary policy? Why don't we just have the Fed print the money directly and give it to the people, direct deposit into their checking accounts? Let's have that go against this average inflation targeting backdrop. So inflation goes past 3, 4. This is great. Average them together. We're winning. Or the horse is out of the barn and really hard to get back into the barn. And yet you have your entire staff saying, based on our model, sir, we believe this is going to be transitory. We can't exactly define transitory, but we suspect it's going to be measured in months, not years. And we think that no matter what, we should stand together and stick with this transitory call. He's still wiping that egg off his face.
Right.
And then there's a leadership crisis. The Biden administration's like, A or B, or A or B, and that's never happened. They've never been indecisive.
Yeah.
So, but while that's happening, all of your ranks inside the Eccles building,
Yeah.
they don't know who the general is. So they don't know who they're taking commands from in the future.
And the lieutenants were leaving the ship. Right?
Oh.
They're all leaving because they were trading on the inside.
You had Kashkari everywhere. You had Evans saying one thing, Daly saying another thing. There's Jim Bullard off off on the spectrum, talking to people who are like, that guy's an idiot. What is he taking? And as it turns out, right when we spoke, right after he got confirmed with 80 votes in the Senate,
Right.
which cleaves to the Federal Reserve Act of 1913. These are apolitical appointments. They should never be confirmed on party lines, ever. They should always have a majority vote in the Senate, at least 66. So Powell gets his 80 when they finally confirm him in May. And we have one sitting governor, Kamala Harris had to break the vote, 51, and two, Lael Brainerd, 52 votes.
Crazy.
These are pure political appointees. I'm not making, they're lovely people, I'm sure. And they're brilliant, I'm positive, because they're in these cute little economic journals. And they've had their papers published, so they have to be brilliant. But they were confirmed on party lines. And I think that Powell's done with the politics. I think he's finished with it. I think
Really?
he was carrying around Volcker's book for a while. People forget that before there was full mutiny on the Federal Reserve Board, Wayne Angell changed his vote, so he didn't have literally a unanimous vote against him staying the course in fighting inflation, that Powell had death threats. But before all of this, he was the president of the New York Fed. Can you imagine a president of the New York Fed telling Wall Street that it didn't, I don't care what happens to the markets, it's not my job. My job is to look out for the long-term health of the U.S. economy. Ever since Volcker's predecessor came in and said, it's a stock market. Yes, Maestro, it is. Well, we're going to make monetary policy based on how investors think we should make monetary policy. And it hadn't changed until Powell was put swinging in the wind.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.
But has it changed? Because so many people.
Well, let me think now. Let's see. Now, this is the third fastest since 1980 tightening cycle.
Yeah, so that part changed.
Yeah, but the numbers part changed.
His staying power, like, I mean, at every turn, anyone who's doubted him has been wrong. Like, so is he just going to stay with that, fight inflation for the people, ignore the market?
Look, in October 2012, he was concerned about quantitative easing, inflating a duration bubble across the credit spectrum.
Right.
Those are his words. He was worried about how difficult it would be to extricate the Fed from a big balance sheet. So he's worried. He understands the dynamics. He gets it. I'm not defending what he did in the aftermath of the pandemic that appears to have bailed out all of his PE crony buddies.
And his own PA.
I'm not. Well, okay. If anybody thinks that he did insider trading, those are the biggest morons on. Sorry, those are the biggest morons on my Twitter feed. Are like, Powell's just in it for insider trading, and I'm like, well, according to the sales, he was down 31%. So maybe he should avoid going into investments when he retires,
right? Because
your clients would not appreciate it if we've only lost a third. We're fine. Now, Clarida, there were others who made a pot ton of money. But Powell lost a ton of his own money.
Yeah.
He was not, there was no insider trading when it came to Powell. But the perception's there.
Yeah.
But he's not that good of an
Guilty
investor.
by association. He's just not that good.
Guilty by association. But I mean, to have transitory, to have that egg all over your face, to say, I don't want to be the next Arthur Burns, to have your hero and role model be Paul Volcker, who didn't give a shit about Wall Street. That's how he's behaving right now. And maybe he doesn't even believe in the zero bound. And if you go back and look at those 2012, 2013 FOMC transcripts, when he was just a young pup on the Federal Reserve Board and a very quiet, circumspect governor who didn't give splashy speeches like Neil Kashkari.
No.
If you go back and read what he said back then, he was like, this zero bound stuff is going to create some bad things. So maybe he's trying to get to 5 so that he only has to go back to 2. You ever think of that?
Yep. I haven't thought of anything that you tell me. I mean, generally speaking, I wouldn't know. But what people want, like again, quite literally, when I'm getting chirped by my own clients, getting called names and that means that one, we're right. This market's going lower. It doesn't have to go lower every day. It doesn't have to go lower today. But it also means that there's this almost existential threat in the asset management community right now that if he does what you say he's going to keep doing, and he doesn't do what they need him to do, they don't exist. Levered long investing doesn't exist. Running a hedge fund with 300% gross, 80% net long leverage, running a high yield levered long fund doesn't work. Running fixed income money, basically the way that it's been run, since Volcker, doesn't work.
Look, securitization has never been tested. Every single time you've had securitization tested, the Fed has come in and bailed it out. Right now, balance sheet's an issue, a big issue. That's why asset-backed securities are getting pulled at pricing. That's why commercial mortgage-backed security prices are ugly. And if you break securitization, you're going to take the triple Bs down. It's just $3.5 trillion, don't worry. But you're going to take triple Bs down with you. You're also going to put the job of credit worthiness, of determining who's credit worthy, back in the hands of the banks by letting a market that has basically raped America go away. Now, it's a huge chunk of jobs on Wall Street. Everybody loves securitization. The more levered, the better. In it to win it. I get it. If he continues down this QT path that he is on, all the crazy people have gone really quiet on my Twitter feed because they're like, oh my God, did you see H4 after the close on Thursday? The balance sheet's actually shrinking. Well, it's happening.
And just barely for the first time it's happening, right?
If you do the math, okay, Treasury inflation protected securities gain in value when inflation goes up. So the Fed's gargantuan TIPS holding, it's grown in value. So they're like, oh my God, they're in QE. And I'm like, no, it's an accretive investment. They're making money on it because they're not fighting inflation. So I apologize. But in the background, if you net out what they have earned on their TIPS, they're directly on schedule, exactly where they said they were going to be. They're at the juncture where they're going to have to decide whether or not to sell mortgage-backed securities. I say they're not going to do it. But Powell said at his June press conference, if we come down to it and quantitative tightening is not proceeding as planned, $95 billion a month, then we'll shift more focus away from these slow prepays because Americans aren't paying off their 2.5% mortgages if a 30-year fixed is 7%. So we'll shift away from mortgage-backed and we'll put more into letting treasuries run off.
So it's basically all playing out the way that he said he was going to play it out.
And he doesn't want to talk about it, if you hadn't noticed.
Why?
QT.
Why not?
Because he told you, the first time he told you, he was parroting Janet Yellen, and he decided that was not a good idea.
Right.
You should only have to learn that lesson once. Yeah. So the second time, he didn't say it's going to be like watching paint dry. I'm not going to quote Yellen, but he did say something that is nuanced but different. It's happening in the background. Don't ask me about it. I don't want to talk about it. It's happening in the background. And then you wake up one morning and you're like, the pound broke. It's happening in the background. Sri Lanka's gone. It's happening in the background. What did you not hear about me not wanting to talk about? Quantitative tightening, $750 billion run rate globally with what central banks are doing right now. Globally, every month.
It's like Fight Club.
It is, and that's why you're seeing things start to break, because whether it's a British pension and everything that they're doing is predicated on leverage, or a U.S. public pension, they've got securities that they've put up for collateral. What happens with them? What happens when they have to mark their private equity holdings to market?
Oh boy, that's coming in actually this quarter.
Yes, it is.
And the hedge fund redemptions, we have it on pretty good, good sources that $200 billion in hedge fund redemptions coming in the fourth quarter. That's a gargantuan number.
If you're Joe Q, I need to match my assets to my liabilities, and the 2 years that got a 4 handle, you're like, we're going to be doing some rotating here at the pension. We're going to be reducing our risk profile because we can actually get paper with a with a decent yield.
This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today, trying to give you all the content so that you can see that there are many tools in the toolbox to play at the highest level. You know, leadership matters at Hedgeye, so again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probability. It's not about picking stocks. It's about picking the right portfolio. Execute across everything. Don't get distracted by the MSM and the tourists. They're very dangerous. I will grind and execute for you with our people and with you.
Right. So just to unpack, like, okay, all these people, financial incentives, existential threat is for him to pivot. He's not going to pivot. Instead, you're going to sit on this plan and rotate, which will again annihilate people that thought that that's going to be the future of investing. And even if
you succeed, if nothing systemic happens.
Well, what would he define as systemic? S&P's down 25%.
That's not systemic.
High yield spreads 530 over. That's not systemic.
That's not even remarkable.
Would he consider UK run on pension fund in the U.S. systemic?
Apparently not.
No. Right.
No, he wouldn't. If you woke up one day and full credit to my buddy Ralph, and he kind of put this in front of me.
Ralph who?
I can't say.
Okay.
Damn, right?
I can't tell you who told me the 200 billion either. Let's call him Ralph.
Okay. Oh.
Ralphie boy.
Okay. Yeah, it's good. Christmas is coming, don't you know? It's all in the stores right now. They're sitting on this little thing called a lot of inventory. Whoopsie. If you wake up one day and craziest case scenario out there, we're no longer taking redemptions for $HYG. Have a nice day.
Really?
Well,
okay.
There are redemptions going on in the background, LQD, HYG, fund outflows. Sometimes we get fund inflows. On a day like today, we're probably getting massive fund. Actually, today's curious because HYG is flat as a pancake and the markets are up big.
Well, that happens all the time.
Yes.
What happens in equities now is it's all the bear shit that bounces. So all the Goldman bear shit baskets, Bitcoin baskets, high short interest baskets.
Bitcoin's down.
Yeah, no, that's the most.
And HYG's flat today.
That's the most interesting thing today.
And yet, all Powell needs is the S&P to be up. Oh, I got license to go kill some more.
Yeah, he does. So you do. This is what all of our institutional clients need to hear, and yours you've told. But it's you don't. If you keep asking for the same thing, he's going to keep doing the same thing because anytime the market actually feels like they're seeing the thing you want, it gives him more runway to do more of what he's doing, right? Okay.
That means that they're not going to retire his license. He's going to keep his license to kill alive.
Now
he's like 007.
So in Thunder Bay, Ontario, there's hunting season. In Tejas, I know that it's the same thing. Unless you're hunting, I think those pigs, you can kind of shoot and kill as many as you want all the time.
Feral pigs are terrible.
Yeah,
creatures.
you can get in a helicopter and shit.
They destroy my mother's garden.
Yeah, they're terrible. But if
whitetail is big whitetail down there.
There's a season, moose hunting season. I'm thinking, we're in a window of time. Let's just say that he just goes to February, where you could have. Or you already have capital market destruction. But from now until February, if that is indeed the last hike, like that's a long way from Kansas, and I'm not Toto. I mean,
it's a dog year.
Right, but you're saying that no matter what happens, unless it's what you just partly defined as systemic, then that's going to keep happening.
Because remember, instantaneous redemption is feasible as long as something that you have in the corporate bond index can be sold. But what if you wake up one day and the redemptions are continuing, but all you've got left in that index is trading by appointment only, and you can't sell it? Well, so how do you satisfy a redemption?
Well, you can't actually, if you do it, like a lot of our clients will say this, so if you're a fixed income client only, you obviously know this, but it's called market access, right? So if you go in, right now, say you go and it's 130, you're going to put X amount of bonds on the offer. Nobody's going to bid that. You put a bid multiple points below the market, those bids are going to get hit. So there is liquidity. It's just not at the price that the market thinks it is non-systemic.
And that's why I think that the biggest red herring out there. The stupidest thing you can do as an investor right now is just follow spreads. Mm-hmm. You need to follow what the yields are on ABS. You need to follow what the yields are on CMBS. You need to follow the parts of the market that are most beholden to having infinite amounts of leverage in order to exist.
Quite literally, infinite.
Yes, but that are being deprived because it's going on in the background, and he didn't want to talk about it.
Yep.
And you've got foreign central banks parking money at the Fed. You have QT being magnified in the background. You've got money market funds who are like doing Huggy Bear with the 3.05%. So they're keeping this reverse repo full because they're like, why would I buy a bill when I can just sit here overnight in world's most risk-free asset? And so Powell's watching the reserves get depleted much more rapidly than it was told. He was told it was going to happen by the New York markets desk.
Mm-hmm. Well,
so where's your ample liquidities regime? Blah, blah, blah. Why are we talking about this again? Because the RRP's got $2.5 trillion in it.
What have you heard from, like, the New York market desk is a function of New York, guys running a lot of money in New York, obviously the investment banks. I've never been more underwhelmed than doing a meeting. I know that that's probably not something that you're going to say because you actually have access to the Fed. And
I don't. You think I have access to the Fed?
Yes, you do. Compared to me, I mean, like, I'm never going to, like.
I have good access to former Fed insiders. Let's put it that way.
Well, that's a lot more than I do. I mean, my access to the Fed is a bunch of buses and Mack trucks that former hedge fund managers are driving that they want to drive me over with. That's about the only thing that I have access to. They don't, but what I was going to say was I've never been so underwhelmed with the just awareness of how markets work. Like, that's the New York markets desk.
Well, like, but it's very, very extremely talented when there's blood in the streets.
Yeah, well, then
they go on a hiring binge and they hire people who actually understand.
Then you get experience in the crisis, like Cash and Carry did, or whatever his Cash Carry's name is. He's had like 10 jobs.
Yeah, not so much, but yes.
But they
bad example because he didn't quite learn. Anyways.
Yeah, he didn't learn a lot. He's never really done a lot. But
he does know how to run for office.
Yeah, well, that's the point, right?
Who goes to Minnesota from California? Anyways.
Anyway, let's not talk about him. So we get into the real shit. Let's say high yield OAS spreads are 700 over. CDS today, by the way, which is obviously important to watch. SocGens took off, UBS's took off. All this stuff is taken off. It's not just Credit Suisse.
That's so.
Goldman actually CDS. Look at JP Morgan CDS.
So I have a slightly different perspective after spending some time in Europe for the past 48 hours, and that is if the Bank of England's going to really set this deadline, then the same way we used to follow individual bank credit default swaps, now we follow developed market credit default swaps.
Yeah, exactly.
It's like, there goes England. The presumption is Europe is next.
Yeah.
The Euro's next. They really don't have the right structure, though, right? Because there's no Bank of England to buy up gilts. These are Italian treasuries. These are German bunds.
Very good point.
So it's a little trickier with every domino that falls. And you see the Bank of Japan and the Ministry of Finance are obviously at odds with one another, but they're like, we can't let this thing go. Jesus Christ, look at our debt to GDP. We can't let this thing go.
Well, at least they're in it together forever. I mean, today you saw the Chancellor of the Exchequer is saying that's on Bailey's hands. Like,
oh yeah.
That's new. That's the first time ever. Like,
do you think it's kind of like the Biden administration saying that Powell should get serious about fighting inflation and then coming back and saying he's going to break the world? Make up your mind.
Oh my God!
Which is it?
It's interesting that you say that because Steiner, Josh Steiner, who's on my team, he like on our call in the morning, he always goes through our dashboard, what's moving from 5-year CDS sovereign to this morning he was given the update on SocGen and UBS. But it's all one dashboard now. Like you said, it's like he keeps saying these are sovereign CDS.
They are.
Like,
because when you think of the fact that the big U.S. banks delevered, and they did get rid of a lot of their bad loans, big ones. Mid-sized U.S. banks, they got a lot of commercial real estate exposure. Different story. We do not like small and mid-sized banks. Anyways, But when you think about the fact that they never really did have to clean house, then great big European banks are the sovereign.
Yes.
If you look at an aggregate index, which we follow every day, if you look at an aggregate index of sovereign developed market, sovereign CDS, it's just an average of everything. It's like, whoo.
Yeah.
And it's telling you that the same way when I was inside the Fed, I'd be like, Mr. Fisher, excuse me, I know it's 3 a.m., sir. He was never awake anyways. I'm like, but it looks like if Merrill goes, then it looks like, you know, and then Morgan Stanley, and then maybe even Goldman Sachs. But you were watching this, the CDS look like stair steps.
Yep.
And every day that there was more risk in the system, all the prices would creep up.
So we haven't talked about linking this to the you're steadfast on what Powell's going to do.
Look, but if something systemic happens, again, I'm not trying to give myself full disclaimer, but you do not let the global financial system implode.
Yeah, I mean, well, the history of that happening means that it implodes, then you do something. So for me, as a short seller, if the bull case is that you wait for systemic, I already got paid on systemic. We're not at systemic.
But it doesn't look like Credit Suisse was it, and it doesn't look like Bank of England was it either.
No, it's all of it. It's all of it. It's all the same thing. Mm-hmm. You know, whether you're levering yourself up 30 to 1 in your PA, buying some Luna coin and putting a tattoo on your arm, or you're long CLOs at the wazoo, and you're the one, or you're the banker from Credit Suisse who left there 2 years ago that gave you that to your pension, and now that banker's gone because they all left.
And Apollo and Goldman are buying the paper today.
I mean, CLOs in and of themselves. I mean, these things are all organized as LLCs. They're like literally shit in a toilet. I mean, that stuff is...
I'm really unpopular when I say, if you want to know what's riskier than a junk bond, look to the leveraged loan market. They're, no, they're safer. I'm like, okay.
No, the leverage, like the whole point, like the everything bubble is all about leverage. Mm-hmm. It's all about leverage. It's not the dot-bomb bubble. The dot-bomb bubble, you actually had to pay X amount of dollars per stock and pay a commission on the stock.
Yep.
Crypto was, I sell you a coin, Shiba Inu, for 2 cents, and 50 cents it could be if he likes it. You know? Like that's like...
You sound like an Asian gentleman I was speaking to at a cocktail party a few nights ago in Geneva, but anyways.
It's like the everything bubble was all about leverage.
It is, and what we don't appreciate when we're sitting here studying other markets from afar, as if they're not going to affect us, is that the difference between 2008, 2009, and where we are now is the European lending system is no longer enclosed inside of the banking system.
Yes, okay.
You have capital markets. You have commercial mortgage-backed securities in Europe. They're doing very badly. Mm-hmm. But you've had private equity infiltrate these countries, and they've never been tested. Mm-hmm. But they've been using the guidelines of, well, this is the amount of leverage that we should use, based on what they use in the United States of America, mm-hmm. which has this thing called reserve currency status in the U.S. Treasury. Don't pile that much leverage on. People are like, why is the euro a parity? And I'm like, well,
that too. It's like, guys, can you pop up slide? I think it's slide 48 in the macro deck, where I want to get Danielle's thoughts on this through the lens of the dollar, because it's already exploding through the lens of the dollar. But if you go back to, can you see that over mm-hmm. there? So we have, the mother of all breakout. This to me looks like it could be like a 1979, 1980. If it is Volcker, by the way, if you just went with that, let's just use that. Like if he really is Volcker, then first move is not the final move. It's the beginning of the finishing move, which is back then, of course, you had a bunch of disparate, European country currencies and foreign currencies.
Yep.
So this time you only have one currency for all of them. Like, I mean, mm-hmm. that thing that's quite literally a picture of the bomb. If you just like say, okay, today's 1980, it's just from a currency perspective.
Yep.
Is that like if the ECB were to flinch first and not be like Volcker,
yep.
that would make that happen faster, mm-hmm. just like the BOE just kind of did. What do you think about that?
That's why the dollar got weak when the day that the ECB pushed through an unusually large rate hike, and
for a day.
And the euro weakened
for a day. That was the only big buying opportunity we've had in like 2 months.
Yep.
Yep. So what do you think? Just everything that you said, and Daniel DiMartino was talking about this too. Mm-hmm. Like people always say, okay, well, think like a Fed head. That must be what the ECB is going to do. It's like no, that's not. It's not what the ECB is going to do. What do you think that there's like existential risk to that institution? how do you think, and to the euro itself?
I think Europeans do. And it matters what they think more than what we think.
Okay.
And there is this long-running animosity between the people of Italy and the Germans who've taken advantage of the euro to the benefit of their industrial sector, and it's slaughtered Italy's industrial sector.
Right.
Those memories don't die. They don't. So if there's really anything existential, because Germany's putting so much fiscal debt onto itself right now, it's looking after its own house, which we're not used to for a really long time. We're always used to saying, oh, Germany's got the tightest austerity measures, blah, blah, blah. But they also have Italy to think about, and Italy knows that.
Well, Italy goes right and Germany goes left. So you have that. There's so many dynamics to this.
There are. But if you're looking at the differential between Bund rates and Italian sovereign rates, that puppy's just been.
Oh boy.
It's showing you the stress that you're describing. That if you're in Italy, you have to sit back and say, wait a minute. If we're going to go at it on our own, how's that going to look? Because our debt to GDP ratio is through the friggin' roof.
Yeah,
and we're not going to wake up tomorrow morning and start printing lira.
Yeah, Lacaille's point was just that last point, which is, all the people that are running whatever in any of these countries remember what it's like to have like a Latin American currency. So they're not going to be signing up for that anytime soon.
Developed market currencies are behaving like emerging market currencies.
Now they are, yeah, but there's only one for Europe. So really, from my perspective, like measuring and mapping, it gets a lot easier. Like, I mean, I measure and map every single signal of every single, right down to Sri Lankan rupee because you called it out. And you can see it one by one.
Yep.
And then all of a sudden the big one, the BOE, well, actually, no, the pound had been imploding prior to that.
True.
So now we're like in the main part of the show, where the yen's already showed you the path. If you go dovish, your ECB, yen today is at what, a 25-year low against the dollar? I mean, this currency's young.
Right.
Its lower lows have been like when you violate lower lows, you crash faster.
You do. And what kind of a world would we live in if, we're witnessing the implosion of the yen, but does that mean that we all believe that it's no longer a safe haven currency? Because there's a difference between those two. It's one thing to watch a market trade. It's another thing to say, there goes the safe haven currency.
Yeah.
And look at what the Swiss National Bank is doing, because I was just there. They're like, how's that apple holding up? Because they invested so much in this, and they've been the primary sellers of the FANG stocks.
Yeah.
The Swiss.
I believe it.
But we've only really got 3 safe haven currencies on planet Earth: yen, Swiss, dollar.
Oh, not Bitcoin?
Oh, for God's sake.
People are going to freak if I don't start looking at their questions, by the way, because...
We've only been talking for 5 minutes.
Yeah, exactly. Well, let's just finish on one other question on your trip or otherwise. Like, what's the question that you get the most pushback on to your answer?
That Powell's going to pivot.
People say he's going to pivot.
Yes.
You're not. You're wrong, Danielle. I hear you. Good call. Now they got to pivot.
I think he is endeavoring to be the architect of a controlled demolition of the leveraged bond market, whether it's securitized assets or leveraged loans or private middle market debt. I don't think he's going to cry if those go away one by one by one by one by one, as long as nothing systemic is unleashed, and nobody believes that.
Who would like to? If I was him, I'd like to believe that. And I believe you, and I believe the market, so all three of us could potentially believe this.
But we don't, nothing big has gone wrong yet.
No, just the big move on the short side has been great. It's like, for me, it's good. For you, it's good. You're right. But another guy, DeSantis, might want this to happen. Let's just say...
We do have an election coming up, don't we?
No, but if a Republican is steadfast on... Because you could position this as I am very well aware of Fight Club. We just don't discuss Fight Club. Don't talk about this. Don't talk about this. But what I'm really trying to do is get America back on the right, conservative line, lack of leverage, YOLO trading, and then that becomes the message,
if you break the back of the Fed put, then you begin to resolve the inequality divide in this country that the Fed helped create, and you begin to let the American dream come back to being alive. You begin to dissipate this urge to go into civil war.
Right.
Because it's not the haves and the have-nots. If you break the Fed put, you go back to capitalism being capitalistic. You go back to banks doing lending. And you as a Fed, because you have to go hat in hand to Congress, just like Lacey Hunt said. There was a big old chart this week. Look, the Fed's got a loss. Well, no kidding. Look at how much they're paying on interest on excess reserves.
Yeah.
But now they have to go hat in hand to Congress.
So that to me, that's, by the way, in that environment, it would be the equivalent of the 1980s, where the dollar, that chart, didn't come out of nowhere. I mean, strong dollar, strong America, you had an average GDP growth rate between 1983 and 89 of north of 4% real. It was a different economy.
It was a different economy, and there was unionization at the time. So, it's not that I'm not empathetic with the millennials who want their work entitlement. It's that I think the feasibility with 18 straight months of negative real wage gains suggests that you're not going to have a wage price spiral going into a recession when all of these companies are laying people off, but they're laying people off in a different manner than we're used to. Recessions, layoff cycles always begin at the bottom of the income ladder. That didn't happen.
No, it's at the top, yeah.
And they're all getting paid severance. People are like, why are jobless claims so low? And I'm like, if you're getting a severance package, you're not applying for unemployment insurance.
This is interesting because even the people
And they're all one-time charges for earnings.
Of course. I mean, on the high end, it's a way to cover your ass. So corporates should say, okay, look, I can reduce my cost structure, all my high-paying employees, and stop hiring the incremental ones. What we had to pay for, and again, no offense to anyone at Hedgeye, we love you. I mean, what we paid incrementally for engineers and data scientists at the very top of the market cycle was much more than you'd pay a Wall Street analyst to bang out.
Sure. Supply and demand.
It's a real interesting thing. And then on the low end, like my brother's McDonald's franchisee, he's like, I'm not firing anybody who comes to work not on opioids.
Exactly.
These are people I need to keep these people.
Absolutely.
So it's a very different thing than what captain, hedge fund manager, levered long loan guy, it's that community that keeps barking at us.
It's like, it struck me days ago when Walmart's like, we're only hiring 40,000. And Amazon's like, we're such a crappy employer, we're going to hire 100,000 just like we did last year because we know our attrition's at nosebleed levels. And if you look down in the press release, it said, by the way, we're freezing the 10,000 job openings that we have.
Yep.
But nobody, so don't read the fine print.
No,
Amazon's creating 100,000 jobs. It's a strong economy. And I'm like, no. They've already fired more than 100,000 people in the current 2022 calendar year. They've already let go of more than 100,000 people.
Yes, that Amazon on the call on our morning research meeting, which people can listen in on, you'd be perfect on that call. Because you don't take the pablum like the street does, these headline or macro tourist headlines. You actually read it and go down and put it in the model or think it through. And Amazon over the years has been one of the best companies in American history of investing in a down cycle.
Yeah.
Even they are saying, I'm shit scared of doing that right now because my P&L is going to go upside down. And by the way, the market's not paying me to be profitless right now. So, it was one of that morning, I was like, holy shit.
I mean, I'm like, if you've got industrial real estate, actually own the stuff, sell it. Get rid of it. Because it's not just Amazon. You read about Walmart closing an Atlanta facility, firing 1,400 people. They closed an entire warehouse. Bye. And they're just following Amazon's lead. So Amazon's like, our footprint's too big, so we're quietly going to make it smaller, but we're going to say we're hiring 100,000 people for the holiday season. Everything's great.
If I was a politician, if I was DeSantis, there is a clear path, which is a fire-breathing path that you could have maybe the next season of Game of Thrones on, but Wall Street version.
Yeah.
That I can tell you why that's good for America and your kids, but not for you.
Oh yeah.
Like that's, this is inspiring me a little bit because I've struggled a little bit with clients because some of them are really pissed off at me, but they keep paying me, so I'm okay. But there's a point of piss off factor where they'll just stop paying you.
Sure.
And there are 2 points, actually 2 points. They get pissed off because they don't like my tone or they don't like my market call because it's not going to help them, or they stop paying us because they blow up and go away. Mm-hmm. And we're seeing that second one a lot. I mean, you can't lose 30 to 50% in a year and then come back and say the only way you make money is when the fucking Fed pivots.
But to your point, PredictIt, as of this morning, was 83% probability that the GOP takes the House.
Is that what it was?
On PredictIt.
Okay.
But it's high.
That's very high.
The House is high.
Yeah.
The Senate was like 53 to 50, barely. The Senate is definitely neck and neck. But let's just hypothetically say that we get gridlock. I mean, if you say Game of Thrones, and if Jay Powell is like, I don't want to talk about it. It's happening in the background, and the Democrats don't have the ability to legislate. I mean, we could be sitting here next time we sit down talking about debt ceilings.
Yep.
U.S. Treasury defaults. I mean, you want to blaze a trail. If you're Ron DeSantis, you back all this stuff up. Like, go for it. Country's on the wrong path.
Yeah, I have this pet in my model called NASVOL, NASDAQ Volatility, flying at 39 today. Fire-breathing VIX, like that would be the VIX at 39.
Have you seen the move?
Show
160 yesterday.
Yeah, no.
It's the highest since the financial crisis.
If you query any...
That means that there's a credit event sitting out there.
If you query any... the 2 pools of people that are buying stocks today are the FOMO, the retail FOMO investor that has no idea what the MOVE index is. They'd fail that test. Probably 98% of people that buy meme stocks won't even know what the MOVE is, never mind where it is. I'd say long-short equity managers, they definitely don't look at that. I mean, it's like, it's the tail wagging your dog. I mean,
This 25% downdraft in stocks has not been touched by a credit event. And it was 2008. In 2018, it was credit that started the show.
Yeah.
And credit has not been touched yet. But the MOVE index is telling you that something. I mean, I pulled up BCY just a few minutes ago, bankruptcy tracker. As of Friday, this data came out 2 days ago. As of Friday, we've got $247 billion of distressed debt. In other words, trading at 1,000 basis points or more over comparably mature treasuries.
Yep.
The highest since November 2020. I'm like, hello, McFly. Something's happening. And the markets are, the MOVE index and the level of distressed debt, they're trying to talk to you. They're trying to get past what credit spreads are not telling you.
Mm-hmm. No, it's an amazing thing if you just actually have the ability to see it all as opposed to pick what you want to see. All right, here's a first question here. If you have questions for Danielle, obviously pop them in the queue and they'll get voted up or down. You guys can do a little bit more work in here, but I guess you're probably riveted by the conversation. Danielle, to what extent will the Fed, or even can the Fed, move the yield curve back to positive by running off or even dumping more long-term treasuries during QT? Thanks. David.
So, again, dumping I don't think is going to happen. They've already got enough trouble on their hands with the operating losses that they've got. Because again, anytime the Fed has an operating loss, they have to go present to Congress and say, bail me out. Because anything that increases the deficit by law has to be justified and voted on by Congress.
On what period of time that you run a loss?
It doesn't matter.
As soon as it's at a loss, you have to report yourself?
They remit to Treasury on a quarterly basis.
Okay.
And so it's coming quickly.
Shit.
With Republicans running the House, the time that happens.
Okay, so there's that. That's the whole point.
So
debt
there's
ceiling.
that.
Yeah.
There's all of that. So, I mean, I think it's more likely that Treasury is going to come in and buy off-the-run, longer-dated Treasuries that are so illiquid and so problematic right now. I think the Treasury could come in and take those out of the market and just retire them. I think that would be an easier route than the Fed tinkering with its QT strategy.
Mm-hmm. Do you think that would be perceived as QE?
Not maybe by Elizabeth Warren, but probably not by the investment community that knows that these off-the-run, dusty, long-dated treasuries are problematic.
You're not talking about like 30-year USTs. You're talking about like
20-year,
20?
especially, yeah.
Okay. Interesting. There's a couple questions about Powell growing a pair. Yes, she still believes that. I can answer that one for you quickly.
They're bigger today because the market's up. Sorry, Mom. No, my mom is definitely not watching this. She's like, what's that Hedgeye thing? I'm like, nothing, Mom. Nothing. Not a damn thing. Nothing.
What's that? What's that?
She's Southern Baptist. I mean, no,
No. Brian, question from Brian. Danielle, when you say it's happening in the background, it sounds like you're saying the U.S. dollar will continue to go higher. Is that part of my takeaway accurate?
The headline CPI data gives Powell the green light to push through another unusually large rate hike 6 days before the U.S. election. It just does. Now, are there academics inside the Fed who are saying, but sir, wait. The 3-month moving average of inflation topped out at 11% months ago. Mm-hmm. It came in at 2. So, and based on the fact that the 3-month run rate versus the 6-month run rate versus the year over year looks like a cascade, we're getting there. It's obvious that we're getting there. The 12-month is telling the 6-month, and the 6-month is telling the 3-month, and we're going to get there because the housing inflation's already reversed itself. It's just going to take a while to be pulled back out of the CPI.
Yeah.
And Powell's like, what? I can't hear you. What? Didn't you tell me transitory?
He knows.
Sorry. He's hiding behind headline inflation. He's hiding behind the unemployment rate.
Yeah.
As licensed to do what he really wants to do, which is be Volcker.
Yeah.
There's just a lot more debt out there. So,
but everyone from even Jeremy Siegel, who I didn't even know had much of a pulse left, and Jeremy Siegel to
I don't think they even did a commercial break. They're like, let's just keep this thing going.
Yeah, but I mean, we're talking Barry Sterling, like he is like just CNBC will bring him on all the time. Hey, can you tell the Fed to stop it? Like
he's in commercial real estate.
No, but it's
they're
crazy.
Like it's a hard asset. I'm like, it's pro-cyclical.
I think they're both
You're going to get your
too.
ass handed to you.
We could check.
I mean, we had Trepp came out with data yesterday. We wrote about this in the Quill. They had $1.1 billion go into special servicing in the month of September. That means the whole CMBS universe.
Oh, okay.
So there was a 1.1 billion uptick in special service. That means likelier than not to default. You better put it on your radar screen. 57% of that was mortgage paper.
Holy shit.
Office.
I was going to say if it was mortgage.
But 57% were office mortgages.
Yeah, office.
30% was retail. Lodging, default rate.
Yeah, I mean, that's
like
what
COVID,
I mean. Like,
it's like the COVID reopening didn't happen.
You have a whole generation of investors, multiple generation. No, the entire baby boom generation is rate go down.
Rate go down. But I'm sorry.
Barry Sterling get on
forcing
CNBC.
The economy closed and reopening it didn't make bad paper good. Yeah. It just gave bad paper a lifeline.
Yeah.
It just gave it some time.
I mean, if it really was like literally a full-blown, or if it really is what you say it is, which is the most important point, the high probability event in your eyes and in the market's eyes currently, that it is most similar in political shifting from Jimmy Carter, Sleepy Joe, Arthur Burns, Fed, to Volcker, Reagan. Very different.
They are very different, but remember, Reagan blew that deficit up.
Yeah, no, that too. There's that component to it. But you had to go from one to the other before
still,
he
we're
did.
at $1 trillion a year. Standing still.
Right. But let's just get to the first part first. I mean, you had to blow.
But what you're talking about is a mindset.
Yeah, that's what I mean.
You're talking about
cost
shifting
of capital
the mindset.
is going up. Like, it's going to keep going up. Like me, growing up.
So you're going to have lending standards? You're not just going to securitize it?
Yeah, it's quite literally, like when Neil Howe talks about the fourth turning and his new book's going to come out, he never knows, that's the humility of Neil Howe or anybody who knows what they're talking about. You don't know what the future's going to be. But you can put the railway tracks of conditional probabilities on.
Sure.
And you could say, okay, look, the fourth turning could very well be that. Like if you were to just say the fourth turning is you go from easy money to pivot.
At Quill, we think the greatest source of systemic risk in the United States is societal. We think that that's the greatest potential source of a serious market disruption is societal. It's not just people on the far right going to gun shows. There are people on the far left also going to, there were soccer moms who were packing them. It's not just Sandra Bullock in Blindside. There are regular looking normal Democrats out there buying guns because they're convinced that the truth is that the right is already armed up. But everybody's getting ready for armed conflict inside of America. That to me poses an economic risk to the system. And I think it's very real. If you have somebody come in, if Ron DeSantis can swing just a little bit to the middle and speak for the 80% of Americans who don't have a voice, they're not AOC or Sanders or Warren, they're not Trump, they're not some toothless person in the Appalachians who doesn't understand that he used to be a New York Democrat and signed socialism into law with the CARES Act. If you take out those two extremes, 80% of America doesn't have a voice.
Right.
If Ron DeSantis can, grab Tulsi Gabbard while you're at it. She just left the Democratic Party. Put her on your ticket.
She's good, the Hawaiian?
Yeah.
Good looking, too.
There you go, even better. But if you can put a ticket together that brings together 80% of Americans, then you can stop this growing risk of societal strife in America.
That'd
be brilliant.
Point. That's a great
But you would want an independent central bank right by your side.
And you know, like that I'm trying to, in the Great Depression, it was called The Forgotten Man.
Yeah.
There's a great, well-known book that's titled The Forgotten Man. But everywhere I go, and I'm sure if you go see your boys, like, if you go to, they're at Culver, right?
They're at Culver Military Institute.
Like, if you go anywhere other than on CNBC or to this population of people from Barry Sternlicht to whoever who's raising high hell because they're losing money, or they know that this is not good for how they used to make money.
I'm going to go from 5 second homes to 4.
No, but it's just
bless your heart.
Guys, get over yourselves. If I go anywhere else, talk about toothless people. I went to a strip joint once in West Virginia where quite literally...
This is where we go to R-rated people.
There was literally, like, the husband of the performer was there with the wooden tooth. These people, when you said wooden tooth, that's the first, this was before I got married.
You're like, honey, that's a high cash flow business and we don't have to pay too many taxes on it.
Yes, and coming up, it was like great. It was like
it's tucked into your panties, honey. We don't have to claim that to the goddamn IRS.
We were actually at an old wall event. It's pre-marriage, Lori. I wasn't at some strip joint in West Virginia recently, but it was at a Wachovia. We were at we were doing Class 6 river rafting. I remember this. And this guy
at a bank that no longer is with
this
us.
guy was. I'll never forget that because as a Canadian, first of all, we don't have that because everybody's on Pogie, right? Like, and you can get your free teeth or whatever. I've never seen anything like this. Like, if I go to hockey rinks, if I go to places like just around America, like you go anywhere other than what the bullshit you see on CNBC, there are so many people like that, right? These are the people, right?
Yeah.
You're kind of like tapping into I don't know.
My favorite story, because it was Parents' Weekend last week at Culver, so I went from Indiana to Geneva. Little bit of a different cultural shift, but I was in a golf cart with a dad, and he's talking about remote work and work from home. He's like, I told my daughter, she's like, Dad, they tell me that I don't have to come to the office, but I kind of feel like I should. And the father was like, go to the office. And she's like, fast forward a month. All of her friends who decided to stay full remote are fired.
Really?
And he's like, well, it's a good work ethic. I just told my daughter that if she has a job, she should go work where the job is. He's just a flat out, just plain old hard-working American man. Worked hard, sending his kids to a military institute. It's not cheap. She was a graduate from there, and he was like, I get that they're giving you license, but maybe the bosses don't actually believe what they're saying. Because if you go outside of America, 66% of CEOs are like, get your ass back in the office. But here in America, you do the same, it's like only 30%. No, we're going to have this hybrid work. No, we're going to do it. And quietly they're telling HR, we're cutting costs. Whoever you think should be first in line. And HR is like, I've never even couldn't pick this employee out of a lineup. But yet this gal's in the office every day. So who keeps their job?
I wrote this early look the other day.
But if you're talking about a new America, the work ethic comes back too, Keith. That's my point.
Well, the work ethic's there.
I understand that, but it's not there for a big chunk of the population.
Right. It's got to be, that's got to be the principal orientation that you start with from a leadership perspective.
Yes.
That's like a different message. It's not, I was just going to say, the early look I wrote the other day was King Jamie's Path, I called it. And it's drawing from Ryan Holiday's book. I don't know if you've ever read The Obstacle is the Path, or The Obstacle is the Way, which is, more of a, I guess it's more...
I knew Roger Enrico, who used to run PepsiCo when I was younger. And I did a Harvard case study, and then I met him subsequent to life. But his mantra was always, create a crisis. If you feel like your firm is stagnant, create a crisis, and then resolve it. And then you'll get the change agent that you don't recognize that you need.
Right. It's, and that path is actually, the hard path is actually the upside, because if you can get through it. So if you put, like the old Zen story goes, if you put a rock in front of the city so the people can't get out, and what'll happen is that all the soft and entitled people will go up to the rock and just like, fucking go back.
Yeah.
Go back, and don't go back to work. And then eventually some enterprising person like sees a stick and like wedges the damn thing out of the way. It's like we're at that point.
Yeah.
Like where you have to have, but the path is the way. This is the whole analog was, you want the pivot, you want the rock removed.
Yeah.
But if you remove the rock, you just stay in that same fourth turning that we've always been in.
Yep.
But if you keep the bloody thing there, if you keep rate policy there.
You're forcing innovation. You're forcing efficiency.
Right.
And everybody behind the rock lives in California, and Gavin Newsom sends them a check.
Yes. So the path, too, can be, if you just stop raising rates like the market expects you to in February, just not cutting them keeps the rock there.
Oh, yes, it does. It's not the terminal rate, I keep telling people. That has nothing to do with the price of tea in China.
Exactly.
It's happening so fast. It's his, and Lacey Hunt said it's impossible. And he started the Dallas Fed in 1969 because he's right, something will break, something will give eventually, if you keep high rates at a steady state.
Yep. It's just like water.
He's managed to keep, everybody but Lael Brainerd is in line. He's only lost one of his sheep, which she would be the one. But everybody else he's kept in line.
She was never really a sheep. She was a sheep. She was a wolf in sheep's clothing.
It appears that the day he got confirmed by the Senate, he hypnotized all the doves. Come sit here, Neil. Come sit here, Charlie. Come sit here, John. Come sit here, Maley. We're going to keep rates high.
Yep.
We're going to keep rates high. But because they're all still staying in line. You had 3 governors you'd never heard from last week come out and speak for the first time. He's got them in line.
Yeah, she's like the movie Cars. We got a nodder. Like she's just like, she wanted his job. She still wants his job.
Yeah, but she only got 52 votes in the Senate. He got 80.
If somebody could pull this off politically, this guarantees that you will not have Lael Brainerd. You won't have the second coming of Janet Yellen.
You won't have central bank digital currency. Powell recently said, it's going to take a few years. And I'm like, yeah, that's like, leave them on hold forever.
Right. You won't have MMT. You won't have any of that bullshit. But
if you
remove the rock,
no zero bound.
If you remove the rock ahead of the presidential election, even Joe Biden could potentially get elected if the market goes to the moon again.
Well, Weekend at Bernie's did have a sequel.
All right. I didn't know how the closer was going to end. We've talked about strip joints.
Appalachians.
We've talked about Weekend at
Sorry, it's a beautiful part of the country. Yes.
Thank you. I thank you for
leaning on stereotypes. I'm so weak.
And by the way, you know what? She didn't sleep. 3 hours maybe. Came from Geneva.
Yeah.
She had a coffee, which she generally doesn't do. She got in the game and did it for all of you. So thank you very much for doing that.
My pleasure.
We appreciate it. Now
being part of the Hedgeye family.
Now you can maybe take a nap. And for those of you that still believe, you need to believe that the Fed is going to go dovish and cut interest rates. I think we just challenged you to challenge your premise. So thank you very much. It's the 9th in the row for me. I'm gonna have to do something other than do another one of these, but I do appreciate all of your attention. We're trying to get to the truth. We always, or often and always, we won't get there, but we're trying, and we can do that with a great community of followers like you. So thank you very much for your attention and for contributing on Twitter and elsewhere. You know, the truth is easier to find when more people are showing it. So thank you very much, and we'll see you next time.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.